Hello traders and welcome to another video review. Today is Thursday, May 25, 2023. Let's take a look what's going on the Forex calendar today. This GDP is for the first quarter and the market participants expect an increase from minus 0.4 to minus 0.1%. And a number better than this will likely make the euro dollar pair to rally. 1 week repo rate and overnight borrowing rate data from Turkey are scheduled for release at 1 p.m. Repo rate should stay at the level of 8.5%. US GDP for the first quarter is expected to be released at 2:30. Market forecast is 1.1%, which is way lower than the previous reading of 2.6%. Initial jobless claims are scheduled for release at 2:30 as well, and the market expectations are 250,000, 8,000 more than the previous reading of 242,000. Pending home sales data from the US are scheduled for release at 4 o'clock, and the market expectations are very high because the forecast is 0.5%. A nice jump from minus 5.2%. So plenty of interesting data here. It looks like the Thursday trading session will not be boring. Those are only the most important one according to the Forex economic calendar. So because there is something from the Germany that might affect euro dollar and of course the US data, let's start our technical part with the US dollar 4-hour chart analysis. US dollar 4-hour chart is showing us a breakout to the downside, and as you can see we are moving away from the 50 and 100 periods moving average on the 4-hour chart, despite the fact that there is clear and visible bullish divergence between the momentum and the price. So where is the next target for the bears? Apparently it's not that far away. If you can see here, there is the low from the 24th of the March 2023 located just around the level of 1.0714, and this level should be tested very soon. The other level, which is way lower, but it is much more important technical support, is located at 1.0517, so likely 200 pips lower. So that's the level. Thick green line. Let me just zoom in back in to show you guys the intraday technical resistances. You got the resistance here, 1.0762, and the other one is located at 1. Let me just move my line, 1.0832, slightly above the 50 periods moving average. So this is the situation on the euro dollar. We should have some sort of the bounce soon. As I said, there is a bearish divergence between this is the market moving lower, and of course we are looking at the RSI. The RSI is, as you can see, moving higher. I mean, it's not making new low. Basically, it doesn't mean that it's moving apparently somewhere up to the north. So that's the situation on the euro dollar. Let's take a look at the SP500, and what we can see here is that the bearish, like a bearish dominance is being still seen on this market. You can see that the recent reversal from this level here, 4,215, has happened. We are trading below 50 and 100 periods moving average on a 4-hour chart. We got this technical support at 4,100 to be hit soon. Market almost hit the extremely oversold conditions. Nevertheless, if you take a look at this part of the chart, you can see that there is no impulsive development to the upside. Moreover, every time we've made a new local high, it's been pushed down very quickly. Again, new local high and new swing high push down very quickly. So it looks like the bears are getting active every time the S&P 500 is trying to rally higher. Please pay attention to 4,100 points level, technical support. There is another technical support, of course, a little bit lower. 4,050 is the next technical support. So if this level is violated, then the key technical support might be seen under pressure as well. So that's the S&P 500. Let's take a look at the US dollar, the Japanese yen. Why? Because this market keeps moving higher. Recently we've made a high at the level of 139 and 71 pips. Nevertheless, the situation is very similar to the euro dollar. What I mean is that this market is making a bearish divergence, clear bearish divergence, so between the price and, as you can see, the momentum oscillator. So, and a spike to the downside on the euro dollar, on the USD to Japanese yen, might trigger spike up on the euro dollar. So far it's looking good, so far it's looking quite promising. The market keeps moving higher above the short-term trend line support. Maybe some sort of the channel is present here. It looks like, there you go, some sort of the channel maybe is made here. Nevertheless, the main point is that it's looking more and more bearish, and there should be some sort of the pullback or correction to be made soon. Technical support, local technical support 138.76. The other technical support is located at 137.44. Very important technical support because it's just below this this swing high from the beginning of the May, 137.78. So as long as we trade above this level, the outlook is bullish. However, please be careful with the momentum. It looks like the momentum wants to break to the downside. And last but not least, let's take a look at the crude oil. The crude oil market keeps moving higher after this massive pin bar was made. So what do we have here is a kind of a let me just place the technical resistance. There you go. This is still the technical resistance. The market is testing this resistance, as you can see here. Very nice level, 73.97. There was some kind of a attempt to rally, of course, but it didn't work, and the market is hovering around this level here. The local high was 74 and something, 74.72. The local high was 74.72. The local high was 73.13. So that's a very narrow zone. Moreover, this is the technical support for the market as well. So any breakout below the lows of the 24th of the May 2023 might spark a bigger correction to the downside. Nevertheless, it's worth to mention that on a 4-hour chart, this market keeps trading above the 50 and 100 periods moving average. Okay, so someone might say, okay, that's a bullish indication. Okay, that's fine. Nevertheless, if you take a look here, you can see that we got in the background there is a big slide down. So this looks more likely like a correction during the down move than the initiation or another movement to the upside. So please take into the consideration the bigger picture, what's in the background, and the background looks very bearish. So it's not that obvious for the market participants to determine the trend. The key midterm technical support is still located at the lows of the 20 on the 4th May 2023. 63.69 is the spike down. Now we are having this level 64.12, so maybe even this kind of area might be helpful here. Why it jumped here, I have no idea. There you go, I'm just moving it lower. So this is the zone, the main demand zone, the main technical support, horizontal technical support, 63.90, 63.69, 64.12. Unless the market can trade to the upside, as long as the market is not trying to break below this technical support, then of course the situation might be completely different and the downtrend will continue. Okay, on the other hand, a double bottom, anyone? Why not? It's possible as well, but to confirm the double bottom, let's break back above the high at 83.52, so we can confirm a longer term uptrend. Okay, so far it looks promising. However, the outlook still remains bearish on the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.